Hello students, I Dipali Mehta welcomes you on my YouTube channel Smart Learning. In the first video of not-for-profit concern, I had tried to explain you the concept of not-for-profit concern and the difference among the two organizations through an animated video. But I feel that for a subject like a bookkeeping and accountancy, we need a deeper discussion and explanation. So here in this video also, I am taking a recap of the same and will go ahead with the discussion. As in the last video, we saw the introduction, and in that we saw that there are two types of organization, right? That is trading organization and non-trading organization. Okay, so where the trading organization means the association or organization which are engaged or which are involved into the buying and selling of goods and services, like sole trading concern, partnership firm, cooperative organization, public limited companies, etc., which are set up for the purpose of making profit. This is all you have already learned in S.Y.J.C OCM chapter in types of organization. Whereas on other side there is a non-trading organization. Okay, they are engaged in a non-trading activities. They are not involved in the trading activities like manufacturing activities or buying and selling of goods and services. They are engaged in the activities which is for betterment of the society or for the members of their own association. So you can see the examples like sports club, charitable hospital, school, colleges, universities, okay, social welfare associations, NGOs, religious concerns, libraries, etc. Their main objective is to give services to the members. Then we saw the difference between the trading organization and non-trading organization. Now, as we know that the primary objective of the organization, okay, we already saw in the meaning. So the first point here is the same, that the primary objective of trading organization is to earn profit, and the primary objective of the non-trading organization is to provide services. Right now, the second point which we discussed last time as well, that those the same points I'm discussing again to just revise the concept. Now the second point comes over here is that the trading organization prepares a proper set of books of accounts, that is from primary book to secondary book and then secondary book to trial balance, whereas the non-trading organization prepares a receipt and payment account, because their majority transactions they do it on cash basis. Okay, they are not a huge scale organization, they are not a business organization, they prefer to do the transaction on the cash basis only. Then the next point is that as an accounting statements, trading organization prepares trading account, profit and loss account and balance sheet. That is what we saw last year in S.Y.J.C also, in sole proprietorship, and this year partnership final account. Now, as an accounting statements, they prepare income and expenditure account and balance sheet. So here you can see the difference, that there is no trading account because they don't involve into the trading activities. So here they prepare income and expenditure account and balance sheet. Now the next point is that the net result of the trading organization, they show it in net profit or net loss, that we already saw. Now this organization, that is non-trading organization, shows the result in surplus or deficit. Okay, then trading organization's capital fund is a accumulation of owner's investment, that is the contribution by the owner, that is partners or the sole proprietor. If it is a sole proprietary concern, then sole proprietor's investment plus reserves and surplus. We saw that reserves and surplus is nothing but a accumulation of profit. We had kept money aside out of the net profit for emergency, for contingencies. So the reserve and surplus is also owner's money only. Okay, so it's a part of the capital. So capital plus reserve and surplus makes a capital fund. But here in non-trading concern, capital fund is being created out of accumulated surplus over the years, because here there are no owners. Okay, so nobody is going to invest from their own pocket. So here whatever the surplus they will earn over the years, that will be accumulated and that will be the part of the capital, as well as whatever the subscription donation they receive, partial amount or the full amount, they will capitalize. That means they will add to the capital fund. How they will do it, I'll explain you later on. And the surplus of income and expenditure account, that is of each and every current year, also we added to the capital fund. So this is how the capital fund is being created for the non-trading organization. Now here are some important terms. Why terms I have taken? Because this particular topic we are doing for the very first time. As you studied in S.Y.J.C bookkeeping and accountancy for the very first time, so you have been taught the different terms like who is debtors, creditors, what is capital, what is drawings. So the same way here also you need to understand some terminologies which is related to this topic, because this is not a usual organization like trading organization we have already studied. So certain receipts and expenditure, okay, are different. Okay, so we have to understand the meaning of the same. So first is subscription. Subscription is a revenue income of not-for-profit concern. Subscription may be given periodically. All members have to pay subscription regularly. It is credited to income and expenditure account. Now, what do you mean by this? Subscription is an income. That is clear from the very first line. It is an income for the organization, and association receives it periodically. Means after certain period of time, they always receive subscription from its members regularly. Okay, and it is credited to income and expenditure account. But what is this? In the simple terms, if I say, if you are living in a housing society, so though you have bought the house, you have to pay the maintenance cost, maintenance charges. Same way, if you become, for example, the member of a sports club, you paid the membership fees, but then to every year you have to pay certain maintenance charges of the same. So that is called a subscription. So that subscription is an income because it's a regular flow from the members. So it's an income for the organization. Next is entrance fees. Entrance fees are the fees which is paid by the person who intend to become a member of the organization or a concern. Okay, again it is an income for organization, because whenever you become a member of any particular association, whether it is your own communities association or it is a sports club, so when you are becoming a member, you have to pay the entrance fees for the very first time, right? So entrance fees can be considered as an income for the organization, or it can be considered as a capital receipt also. It depends upon your question. Okay, so generally if there is no information given, it is an income for an organization. But if there is a specific information to capitalize it, then we have to add it to the capital fund. Then admission fees. Admission fees are also the fees which is paid by the person who intend to become a member of the organization. The term has been changed. Admission fees is utilized especially in case of hospitals, schools and colleges where you admit yourself. So if you see your admission receipt also, fees receipt, if you see, so you will see the bifurcation that your admission fees this much amount, tuition fees this much amount, library charges this much amount. So admission fees is the students pays regularly every year to become the student of that college. You paid in S.Y.J.C, you paid in S.Y.J.C, so every year student pays admission fees. So it is an income for organization. Then donation. Donation means gift given by either member or any outsider to the organization. So donation is sort of thing which can be given by the member or any outsider to the organization. Like if you see orphanages, old people home, so where the people who are not the member, then too they give the donation for the same. Or sometimes if you see the communities association or any sort of other temples association, any trust of the religious organization, so where members give donation. Now donations are of two types, general and specific. Now if some donor gives donation like without any reason, just gives the money, that becomes general donation. So that is an income for an organization. Where if any person donates money with the specific purpose and states that this money should be utilized for the education of this kids of the orphanage or for the books of this orphanage, then that becomes specific. So that goes to then liability for an organization. Legacy means gifts received under the will on the death of a donor. Means if a person dies, but before dying, if he had made a will, and in that will if he has specified that this much amount of money should be donated to this association after my death, so that becomes legacy. And that also could be general or specific again. If it is general, it is income for the organization, and if it is specific, it becomes liability for an organization. Life membership fees. In not-for-profit concerns, some members pays the life membership fees. That means in one go, they pay the whole amount of membership fees. So that becomes non-recurring income. Okay, so when it is a non-recurring income, it should be always shown on the liability side of the balance sheet. But again, your effect depends upon your question. If life membership fees is given in the question and no information is being provided, then you are supposed to transfer it to the liability side of the balance sheet. Otherwise, you have to follow whatever has been stated in the question. Government grant. The assistance was given by the government in cash or kind with certain specific conditions is called as government grant. That means generally hospitals, school, colleges, certain or orphanages or NGOs or some associations which are working with the help of the government grant. Okay, those associations always receives regularly or specifically government grant. Regularly they receive, that is general government grant for the salary purpose, maintenance costs, electricity charges, etc. They receive some lump sum amount from the government periodically, okay, every month or so. So that becomes general and it becomes an income for an organization. But when, for example, if the school or college wants to extend building of the school or colleges for additional classroom purpose, and they apply for the same, and if they receive the government grant, so that becomes a specific government grant, and then that money should be utilized for that purpose only. Okay, so that becomes liability for an organization. Endowment fund. Now, it is a donation of money or property to a non-profit organization which uses the resulting investment income for a specific purpose. Most endowments are designed to keep the principal amount intact while using the investment income for charitable efforts. It shows on the liability side of the balance sheet. Now, what do you mean by this? Now, a few donors thinks that way, that if today I am giving the donation, what about tomorrow? Now, if you see in this COVID situation, certain NGOs and certain orphanages or old people homes who basically runs or depends upon donation totally. So think about their situation. If in this pandemic situation from the last 6 months, they does not have any source of donation, so what about their basic necessities? So in that case, certain donors thinks about that, together 50 lakhs rupees I'll make an FD. So that is a monetary they are giving a donation. They are keeping into FD, that is fixed deposit. Or some of the donors will think that I'll buy a property, and whatever the rent will generate out of that property, that will result into an income, okay, from that investment, but for a specific purpose. Now, for example, I want that whatever interest generated out of FD or whatever rent generated out of the property, I have specified that this money should be utilized for their food and their health purpose. Okay, so that my income also becomes specific. Endowment fund is definitely a liability. Even income becomes a liability for them. If in a question there is a specification that income generated out of endowment fund is general, it is of no specific purpose, then only it will go to income. Otherwise, it will always go to the liabilities. Special fund. A fund created for specific purpose, it will be shown on the liability side of the balance sheet always, because we are creating fund for the specific purpose only, like prize fund, building fund, okay, or a tournament fund. So those funds will be utilized for those particular expenses only. So it is a liability for the organization. Like how we saw in the final account, provision for taxation. So means we created a provision specially for paying taxes only. Till now, whatever terms we saw, those all terms were part of receipts. Okay. Now this is honorarium. Now an honorarium is an honorary payment made to someone without obligation in recognition of their professional services. For charities, an honorarium is typically a payment made to honor an individual for their charitable service. Now this is an expenditure in terms of, like for example, if there is a government hospital and professional doctors comes to that hospital, so they are doing charity, an amount of money or a payment to just honor their individuality. Just it is a gesture or a gratitude. So it is just a charitable service. Like even in your colleges or schools, at the time of board examination, okay, your school and colleges calls moderators, chief moderators for the guidance lecture. So the colleges and schools doesn't pay a very huge amount of money to them. It's only a gratitude amount which is to be paid to teachers who have come for the guidance lecture. This is called as a honorarium. So honorarium is an expenditure for the organization. Now rest all incomes and expenses you will see common like a final accounts only. But these are the terms which are different and new related to this topic. Okay, I hope आपको यहाँ तक clear हुआ होगा. Next is not for profit concern, wherein question what you will see. You will see the balance sheet of the last year, okay, if given. or capital fund given along with the last year's assets and liabilities in the form of adjustments only they can give, or a proper balance sheet also they can give. Then they will give receipt and payment account. As we saw in the difference, non-trading organizations prepare receipt and payment account because their majority transactions they do it in a cash. So receipt and payment account is a real account. Okay, and then adjustment. Now what about answer? So in this case you have to prepare only two things, that is income and expenditure account, which is nominal account, and balance sheet as a statement. Now what if in the question they give you only receipt and payment account and adjustment? Then only additional thing which you have to prepare is last year's balance sheet to find out opening capital. Okay, because opening capital is very important, because capital will not be shown in the receipt and payment account. So for that you need last year's assets and liabilities. So that must be given in the question, but you have to find out the opening capital. Now let us see ahead the difference between the receipt and payment account and income and expenditure account. Now the difference among these two accounts are very important to understand the concept of final account of this association. Now receipt and payment account is a base for us because it will work for us as a trial balance. Because in partnership final account, in sole trading concern, we saw that from the trial balance we post into the trading account, profit and loss account and balance sheet. Now in the same way, receipt and payment account is going to work as a trial balance in this particular chapter. Now receipt and payment account is similar to cash book. It is a cash book only, where because it is going to record all the transaction related to cash. And income and expenditure account is similar to profit and loss account, because as I said earlier, it is a nominal account, and earlier I said that receipt and payment account is a real account. So receipt and payment account is going to follow the rule of debit what comes in, credit what goes out. And income and expenditure account is going to follow the rule of debit all expenses and losses, credit all incomes and gains. Now the second point of difference is it records only cash items. Okay, because it is a cash book, so credit transactions will not record. But here it will record cash and non-cash items both, because it is a nominal account where we have to record all the expenses and losses and incomes and gains of the current year. So it includes both cash and non-cash items. Then next is it consists of personal, real and nominal account. Means if the money has been received through personal, real and nominal account, or money has been paid to personal, real and nominal account, all of these accounts will be recorded all together in the receipt and payment account. But here in the income and expenditure account, it will only record nominal accounts entries. Then the next important difference is here opening and closing balance represent cash or bank balance. Okay, but here there is no opening balance in income and expenditure account, but yeah, closing balance represents as a surplus or deficit. The difference of income and expenditure account is either surplus or deficit. The last one is the receipt and payment account records revenue as well as capital receipts and payment of last year, current year and next year. Now what do you mean by revenue and capital? That we'll see in the next slide. In short, it records all the transaction, whether it is related to last year, current year or next year. The main point is that because receipt and payment account is a cash book, it doesn't see I have received money for the last year or I have paid the money for the last year. Okay, whenever if the transaction is occurring in the current year, when the money is going out, the receipt and payment account is going to record the transaction, and if the money is coming in, it is going to record the transaction. It will not bifurcate among last year, current year or next year. But in income and expenditure account, it will specifically records only revenue, receipts and payments, and that is also related to current year, because if we'll not record only current year's item, then we will not get the correct amount of surplus or deficit like a profit and loss account. That is what we have followed in partnership final account. So similar to profit and loss account, in income and expenditure account also we are going to record only transactions related to current year, and that is also related to nominal account only. Next is receipt and payment account. Now this we need to understand very carefully because it is our base, and through this account only we are going to do the posting. It is our trial balance for this particular chapter. So now in receipt and payment account, as we know, there are two sides, receipts and payments, like we have done in the last year in S.Y.J.C in cash book. Now here receipts are divided into two parts, revenue and capital. Now revenue receipts means it is recurring in nature. Recurring means regularly, after certain intervals or after specific period of time or in continuation, you get this, money. Capital is a non-recurring. That means the duration, the time, the occurrence is not fixed. When it will occur, we don't know. So it's a non-recurring. Then if you understand this concept, it says it's a regular flow of income, and here it says it is related to sale of asset and creation of liabilities. Okay, now in revenue, as we know, just now I said, because it is a regular, so regularly you get the money, so it becomes your income. Okay, but in non-recurring case, that is in capital receipts, it is related to sale of asset, means assets sold. So it is not precisely fixed that when we are going to sell an asset, and even it is not fixed that when we are going to incur a liability. So in that case, if you see the examples of the same, like subscription, tuition fees, admission fees, interest received, this is a regular course of income which regularly organization and association is going to receive. So this will be transferred on the income side of an income and expenditure account. Whereas the capital receipts, like sale proceed of an asset, yani selling price, endowment fund, special fund. Now you have sold an asset, so it will be minus from the assets. An endowment fund and special fund has been created, so your liability has been created, so it will be transferred to the liability. So that means capital receipts will be recorded in the balance sheet. Okay, as per the adjustment, either it will be deducted from the asset or it will be recorded on the liability side or added to the liability side. So revenue receipts on the income side you will record, and capital receipts you will record in the balance sheet. Same way in the payments also, we will bifurcate in the two sections, that is revenue and capital again, and in the same way it is of the same nature. Revenue is recurring and capital is non-recurring. Here we have to understand the meaning of the same. Here it is a regular expenses. Revenue receipts is a regular flow of income, whereas revenue payments or revenue expenditure is a regular expenses of an organization. Capital payments or capital expenditure is related to purchase of an asset and payment of liabilities. It is exactly opposite of capital receipts. यहाँ पे क्या होता था, सेल ऑफ एसेट और क्रिएशन ऑफ लायबिलिटीज है, तो यहाँ पे परचेज ऑफ एसेट और पेमेंट ऑफ लायबिलिटीज है. Now regular expenses like salary, wages, electricity bill, printing and stationery, all those expenses which are required to run or manage day-to-day transactions or day-to-day activities of the organization. Now here it is like furniture purchase, investment purchase or bank overdraft paid. So here we are purchasing an asset, so it will be added to the assets, and liabilities has been paid, so it will be deducted from the liabilities, or it will be totally written off from the liabilities if we have fully paid the liabilities. So again, revenue payments will be recorded on the expenditure side of the income and expenditure account, and capital payments or capital expenditures will be recorded in the balance sheet, right? So it is very much clear that in income and expenditure account only revenue receipts and revenue payments will be recorded, and in balance sheet capital receipts and capital payments will be recorded. I hope यहाँ तक आपको clear हुआ होगा. Further, the very important point for income and expenditure account, this is very important rule you have to remember. Current year always add, last year and next year always less. This is not a new thing, but in a different way it has been presented. Now current year always add, that means in final accounts also we have studied that in trading account and in profit and loss account we record transaction related to current year. So same way in income and expenditure account also we record the transaction of current year only, as we saw in the difference between the receipt and payment account and income and expenditure account. So current year always क्या होगा, add, last year and next year always less. तो ये नेक्स्ट ईयर तो हमने पार्टनरशिप फाइनल अकाउंट में भी किया है, दैट इज एडवांस प्रीपेड और जिसको प्री रिसीव्ड बोला जाता है. सो इट इज ऑलवेज लेस. The only new part over here is last year. In not for profit concern, you will see many of the times or majority of the times that expenses or incomes which are related to last year has been paid or received in this year. Okay, so those expenses or incomes has to be minused or less from the amount of receipt and payments, because those amounts are not related to current year. So if we'll not minus those amounts, we will not get the exact amount of surplus or a deficit. I hope यहाँ तक आपको समझा होगा. If you have any doubt, please put it in the comment box. I will reply to the same. Now in the next video, we'll see the format of receipt and payment account, income and expenditure account, and balance sheet of not-for-profit concern. Till then, see you in the next video. Take very good care of yourself and your family. Bye-bye.